Hello, everybody. Welcome to the Sunday live stream. I was joined, as ever, by my buddy, Jerry Hall. Jerry, how's things going in Costa Rica?
Oh, man, I'm living in paradise, living the dream, my friend.
Yeah, you are. That's for sure. And when we get to, we're going to talk about some macro stuff and healthcare and stuff and things like that. I just want you to talk a little bit about your healthcare experience over there when we get to it. But before we get into all that really fun stuff and Jerry's health types of history, let's talk about the main reason why you're here, which is MicroStrategy and Michael Saylor and the CEO of MicroStrategy. And this is actually from Polymarket, which I do like to use because you can kind of get the wisdom of the crowd. And they've been pretty spot on for a lot of things, specifically those having to do with elections, presidential, mayoral, and also for Senate and House. And we'll see how that works out moving forward, especially because we're coming into a midterm year, which is 2026. But this part, MicroStrategy sells any Bitcoin buy. And it's kind of surprising that this is actually up as high as it is, 18%, 11% for March 31st, and 4% for December 30th. I don't think this is going to happen, but let's get into why the thumbnail and title said that MicroStrategy would sell. And this is why, because they said they would. MicroStrategy admits a Bitcoin sale is possible. They confirm a Bitcoin sales trigger tied to the MNAV and liquidity stress. MNAV nears 0.95, raises risk as capital markets tighten for MicroStrategy. This is actually from the CEO of MicroStrategy, Phong Le. And this is for the first time, because before this, they have always said they're not selling Bitcoin, they're not selling. But for the first time, and this is on actually on What Bitcoin Did podcast yesterday, he acknowledged that the company could sell its 649,870 Bitcoin holdings under specific crisis conditions. And of course, this is a massive departure from the never sell. And this is what he said. There. Where'd it go? Here we go. It comes out of this. If MicroStrategy's stock trades less than 1x MNAV, and this is directly from Phong Le, and we can't raise fresh capital, which is kind of difficult right now because the stock is down, we would sell portions of our Bitcoin as a last resort move. He called it mathematically justified to correct Bitcoin. The pressure stems from a $750 to $800 million in annual preferred share dividend payments issued during MicroStrategy's expansion into Bitcoin. Previously, the company used new equity issuances to cover these costs. You know, new people come in, they pay MicroStrategy for stock. That money gets sent over and they pay dividends, which is not a Ponzi. Okay? With the stock down more than 6% from its highs and market skepticism rising, that avenue is narrowing. Why this matters for Bitcoin. The hodl forever stance is now not there. They acknowledge a sell condition, even if distant, shifts that narrative towards realism. Liquidity can override ideology. Market structure matters as much as conviction. That is very true. And the Bitcoin cycle now is a new and measurable threshold, which is 0.9x MNAV line. So it's a lot to take in. Thankfully, I got Jerry here. So Jerry, do all the heavy lifting for me because you're the brainiac of this duo. So go from there, because I personally don't think that they're going to sell, but it is interesting to me that they did come out and said, yes, we will sell, and we will sell because of these specific conditions. If these things happen, we got to do it. Thoughts?
Right. So I think it's a lot to do about nothing, right? Having a philosophy and understanding the reality of your obligation to your shareholders, which is what they're acknowledging, are two different things, right? And what do I mean by that? And what does that equate to for the Bitcoin holdings that they have? The set of conditions state that there's a Bitcoin price involved, so the value of Bitcoin, the value of their MSTR stock itself, right? Mm-hmm. And the biggest condition is their ability to go into the market and raise more capital, right? This is kind of what we've been talking about a lot. We've been talking a lot about how money comes into existence. It's the same with a corporation like MicroStrategy. There are all kinds of debt instruments that they can utilize, right? That would be justified, because if, for instance, they need to go into the marketplace and borrow at 7%, they can easily justify to their stockholder base and their board, hey, we're going to borrow at 7% with an appreciating asset that's been appreciating 50% a year, year over year. It is more advantageous for us to take on debt than it is to sell Bitcoin, right? And so although it is mathematically possible that a situation arises where they need to sell their Bitcoin holdings, I honestly believe it is a last resort. Therefore, if it is a last resort for them, the world is burning around us. You know what I'm saying? It will not be a casual Wednesday that we see the press release. Oh, the board of MicroStrategy has decided to offload, 1,000 of their Bitcoin or 250,000 of their Bitcoin. I think it would have to get to a place where we're kind of all screwed. You know what I mean? Before that happens. So it's important for us to take a lesson like this and apply it to ourselves. What strain and pressure do we need to be under to liquidate pristine assets so that we can continue to survive? And are we doing it for survival, or are we doing it for a quality of life? Or are we doing it for a black swan?
True.
And I use these kind of things to look at my own portfolio. How strong is my position? And I think it's a great way for us to have these kind of conversations.
Yeah. And I think, you brought up a good point about what would it take, what kind of pressure would it be for us to sell these pristine assets? And if you think back to 2007, 8, and 9, there was some really great pristine assets called real estate. And a lot of people had to give that up. And a lot of people are still hurting from that time frame. And it had nothing to do with the structure of the house, with the foundation, with people who wanted to rent it, and just pricing. It was just this massive fluctuation, and they had to sell that at that point because there was really no way out. So I'm not saying that that's what's happening here, but like you said, Jerry, it's not so much about the asset itself; it's about the world that is burning around you. And who knows if that's going to happen? If we're going to see like the blow off top coming in 2026 and macro runs like crazy, and we talked about this yesterday, or if we have a stumbling block. It'll be interesting to see where it goes. But just last assessment, Jerry, give us what's the probability of this actually happening going into next year? I mean, where would you put it?
I haven't done any models, but I can tell you, looking at Polymarket that you just put up, right? I think that is a great gauge. There's an algorithm behind that has done a lot more research than Jerry has.
Yeah, it's called Bobby. It's called my friend Bobby and a bunch of D.A.N gamblers. That's their algorithm.
Sure, but you know what? They're the house, right? They're the house, and they're going to make that money on that commission. I love it. I mean, 96% to 83% is a range over an extended period of time. We're talking a minimum of 7 months.
Right.
Almost 8 months. Almost 8 months we're talking for a 17 or 19% chance.
True.
I would take the under on that.
My friend Bobby would do the 50x leverage over, but yeah, I can see
those odds.
With those odds, and then it's pretty low. We'll see how it works out, but I just wanted to bring it up to everybody because there are these things that we all should be aware of, even low probabilities that they are. And it is interesting that we talk about this. There's been a lot of rumors circulating about what happened on 1010 with Binance and a host of other exchanges, the massive leverage, and JP Morgan. And I thought it was interesting that you actually, thank you for sending this to me. JP Morgan is going to let institutions borrow against Bitcoin and Ethereum holdings. Now this, I think, is the next evolution. And we talk about killer apps. I still say that the killer app is payments. Next killer app will probably be tokenization. And this could be the next, I mean, the third.
I'd like to throw my hat in the ring on that. I think the next killer app is credit.
Yeah.
Is credit. See, if you would allow me a tangent, when I look at, for instance, when 2008, we call it the Great Financial Crisis occurred, it was basically a crisis of liquidity based off of underlying and unstable collateral. That collateral being in the housing market, the ability to pay once the adjustable rate mortgages kicked in.
Oh, yeah.
Right? And so that expansion of that kind of debt, which was used as collateral in a house of derivatives, once those pieces of that Jenga started to get pulled out, in other words, people could not meet the payments and started their default cascade, once the adjustable rates kicked in and those teaser elements that allowed people to perform under those circumstances went away, I think what it brought to all of us is what is the quality of the collateral that's upholding this debt market up, right? And so obviously, as bonds continue to be the pristine collateral in the world, as their rates and yields go, so will a lot of these other things. Now, once the volatility in Bitcoin starts to compress even more and more and more, probably 5-6 years from now, it will be literally just like taking a mortgage against your house.
Right. And you know, that was something that the current administration was trying to put forward, which was, if you want to do loans with digital assets, we'll do that, but there is no reevaluation. It'd be the same thing as, like, if you put up your house as collateral, you put your house up $400,000, that's the collateralization. You take whatever percentage that you want to, but it's not like you can say, you can go back a year later and go, okay, how much is the value worth in 6 months or 7 months or whatever it is? Oh, the value went down. Well, guess what? You have to over collateralize with another house. That's not how it should work. Later on, if we can just say, this is how much the price is, this is what it goes to, great. The thing is, like you said perfectly, volatility. And if we can get this volatility down, and again, 5 or 6 years, and we talked about this yesterday, actually, about the reduction in volatility over time, which if you like,
participants rotate into the space.
Yes.
As more institutional participants start to give way, that a lot of retail bags are being sold. I mean, and obviously, if you bought in Bitcoin for $1 and you can sell it for $100,000, that is a wonderful return on your investment. Why wouldn't you want to capitalize some of that, right?
Yeah.
Unless you had some other strategy like borrowing against it.
Jerry, they want us out. They want retail out, so they can have institutions in, and they can control the game, and they can just keep things stable and boring. That's my assessment. I could be wrong. Let me know in the comment section, but that's what I think. But to finish up with this story, it is interesting that JP Morgan and Jamie Dimon switched on it so fast, but here we are. And again, this is institutions. This is not you and I. This isn't retail. This is like, hey, hedge funds and sovereign wealth and whatever you want to do. We're not going to let retail do it, but institutions, absolutely. So earlier this year, JP Morgan began accepting crypto-linked ETFs as collateral, which is a pretty smart move. New program allowed clients to pledge the crypto themselves rather than the ETF shares. It also, and I had forgotten about this, JP Morgan launched its deposit token, JPMD, on Coinbase's Base network. Following a June 15th trademark app, JPMD is fully backed 1-to-1 by US dollars and is available to institutional, there it is, institutional clients only. They hate us, Jerry. They hate us. And this last piece is why institutions are rushing into Bitcoin loans. This is John Glover, leading CEO. I met this guy at the Bitcoin conference. He says the reason why is the current bull run, coupled with the new administration in the US, which is much more pro-crypto than the previous one. They're so pro-crypto that their family invests into it. And there's no conflicts of interest. It's great. And the continued influx of institutional capital and the approval of Bitcoin ETFs have massively legitimized digital assets. So Jerry, just real quick, any other thoughts on this one? Is this a good thing or not a good thing?
I had one thought, and it was based off of your healthcare talk the other day. And one of the things that I was thinking about was having a group of us come together and formalize an entity, right? Just like with the healthcare, right? We create our own healthcare group.
Right.
In essence, is what that was. Why not do that for financial services, right? Why make an individual go through the process and the process to become an accredited investor when we could have a group of 50 of us become a group, and that group is the investment vehicle, and therefore afford the investment vehicle all of the same ability that an accredited investor would have, only through a group.
That could definitely be happen.
Concept.
Yeah, that makes sense. We can definitely do that. Actually, we'll might talk about that. But moving forward, so we can get to the Q&A parts, Crypto Bird had a good point. He says, I think middle class is poor and has no money to buy crypto. And I have to agree here. I think there are some people that are getting squeezed. And there was a great video. Well, first of all, I saw this as a post from Charlie Baleo. And he talks about how US retail sales have increased 3.9% over the past year. At the exact same time, the consumer sentiment has plummeted to near record lows. I think we see that actually in the stock market. This is from Bar Chart. S&P 500 trades green each day or every day of Thanksgiving week for the first time in 9 years. And of course, we're seeing the S&P 500 hitting near record all-time highs, but yet the sentiment is in the toilet. So what was just said here is perfectly. And I'd like everybody to watch this video. I linked in the description, The Great Divergence, Consumer Gloom versus Market Boom. But one of the things he talked about in there was average family health insurance premium in the United States. And it went from in 1999, which some of you might be like, oh, that's when I was born. But for the older people, like I remember that time, $5,800 for health insurance premium for a family. And then, of course, people say, well, you know, like Affordable Care Act and Obamacare, it still went up. I think that was in 2008, maybe 2010, I can't remember. It went from 15,000, now we're at 26,933. So, Jerry, what you were just talking about getting things together and, you know, for healthcare, I just think that, first of all, healthcare costs are high. And when you watch this video, you're going to see how everything is high. And Crypto Bird is right. Everybody's just too poor to get in. People are like, where's retail? Where's retail? They don't want to keep getting screwed over by the VCs and meme coins and nonsense that is crypto. And we've lost our way, and we need to bring them back with talk of Bitcoin and sovereignty and decentralization that actually is working. Jerry, anyhow, what's your thoughts on this?
Well, I think it's all about incentives, right? So big pharma and big medicine and big food are all incentivized for us to consume more. It's a capitalistic consumption-based profit model, right? I live in a country here in Costa Rica, for instance, I pay $40 a month for what they call caja, and it is the equivalent of what would be Kaiser Permanente in the United States.
Okay.
I literally have a Kaiser Health Permanente plan in Costa Rica for $40 a month.
Oh, it's pretty good. $40 a month for you.
The laws in this country prevent their usury laws. They have medicine isn't supposed to be a capitalistic endeavor. It's supposed to be a humanitarian endeavor. Therefore, you can have a private practice as a doctor and charge whatever you want, but the country makes sure that there's a base level entity that is humanitarian based. And doctors do go there and they do get paid, but it's a completely different model. They're like incentivized to keep you healthy because it costs less money than it is to allow you to run amok and then have all these expensive medical elements in your life.
This is very true. Jerry, there's no money in keeping people healthy. There's a lot of money getting people sick. That works out great. But yeah, for that, you're right. It'd be great, but that's just not how things work, unfortunately. In capitalism and healthcare, unfortunately, that's how it is. So, fortunately. But anyhow, piggybacking on what I just talked about, as far as like the prices for medicine and things like that. I just did a video a couple of days ago, and it was, if you just do a search for decentralized healthcare, And what Jerry was actually talking about, making your own group and putting that into and paying for the premiums of people. That's essentially what this whole video is about. Doing pretty good. Almost got 40,000 views or so. And I think decentralized healthcare will probably be the future. But I just found it interesting that we went up in this trajectory, and people think that we're going to just be stagnant here. Healthcare is only going to keep going up. And if healthcare keeps going up and people have to have it, then the middle income people get squeezed, and there's less people, and there's less people for the markets. And we're just kind of doing like a nice little spiral. Anyhow, let me know what you think about that in the comments section. And then lastly, I thought this was interesting. This is what Jerry sent this to me. Bergen County out of Pennsylvania.
Actually, New Jersey.
Jersey, thank you. Why did I say Pennsylvania? Marks largest blockchain deed initiative in the US. So this is another one of those killer cases for crypto. I always thought it was going to be payments, but I still think it actually going to be payments. And then we can see something like this. And then also for, like we just talked about, for either healthcare or whatnot. So anyhow, Balcony, leader in blockchain-based land and record management, signed a 5-year agreement with Bergen County to digitalize and bring 370,000 property deeds on chain, which is $240 billion in real estate value. So let's just make this crystal clear. They're just putting the deeds of the houses on the blockchain. Which block is it? It's Avalanche. It says right here, powered by Avalanche. Bergen County will gain a tamper-proof, fully digitized and searchable chain of titles across all of its 70 municipalities, cutting deed processing time by 90%, while dramatically reducing the risk of fraud, title disputes, and administrative errors. So, Jerry, when you sent this to me, what's your thesis here? Is this going to keep continuing or not?
I don't know if it will or won't. I think the success of it, like if it creates efficiencies within that municipality and they're looking at trying to compress their budgets, I think it all boils down to incentives, right? Will that municipality continue to be incentivized to continue? So does it spread to the next county in the state of New Jersey, and et cetera, et cetera? And if so, is it Avalanche that's at the base of that? If so, it might not be a bad idea to keep my small bag of Avalanche staking. I mean, I'm looking at it for how do I benefit from it?
Of course.
But I honestly believe the idea here is that we own these assets that become the infrastructure for elements that serve billions. And that is a use case where billions can be served, billions of dollars of value, and eventually billions of real world assets. And that is the deeds to property.
Yep. That would be big. And I think it's also big because of scams. There's a scam going around. It's not new, but it's been going around for quite some time, where people, they get your personal information, name, date of birth, address, social, that type of stuff. And they're able to run a check against your deeds, and they're able to actually transfer it into their name. And this has been going on for nationwide for quite some time. So what they'll do is they'll transfer the deed, and it's not like they're going to just move into your house, like, get the heck out of here, bum. They're going to take that information, they're going to go to a bank and get a loan against your deed. And then you don't know about it until the bill's due. And it comes to your house, you're like, wait a second, who took out a secondary mortgage on my house? Oh, it was just some scammers. And then who's on the hook for it? And people are going to litigation right now for it. So I think this is a good play, and this happens everywhere. And just for fraud itself, I think this is a pretty fantastic thing. And like Jerry did actually say, which was pretty smart, which was cut down on costs. So definitely see how that works out. And then lastly, Jerry said infrastructure. And I was interested by this little piece, AI. This is from bar chart or TFTC. Look at this. U.S. data center capacity has exploded to nearly 80 gigawatts for 2025, enough to power 60 million homes. Now we're talking about compute and anything else. But this part here, planned builds of new data centers now make up 65 gigawatts, doubling in a year and 8x higher than 2022. What you'll see here is that in 2025, planned U.S. data center build-out status by construction companies. Look at all these data centers that are planned to be built. If you don't think AI is going to be big, just take a look at this. And then this very small amount installed, underway, and then look at how much has been built so far in 2025. This little tiny gray part right here. And I take a look at AI, I go, man, that's a pretty big play. And I don't know about you guys in the comment section, but have you seen a bunch of these like warehouses being built around where you're at and nobody's occupying them? I see it everywhere here in Texas, like everywhere. There's these new ones going up. They've been built in like the last 6 months to 12 months. There's nobody in there. I don't see any vehicles whatsoever. And I'm like, I think I know what they're doing, but I could be wrong. Jerry, what's your thoughts on this one before we get out of here?
Well, there's chip shortages. Number one, the chips, right? One of the technologies I've been looking into is called optical interconnect. And it's basically to take, currently in a data center situation, a tremendous amount of data flows through a copper wire over electrons. They use electrons, right?
Yeah.
Optical interconnection is a type of technology that allows data to flow through photons, light.
Oh, wow.
Light, photons. It's much faster. It takes a tremendously, it reduces the electrical burden by like 35–40%, which is a relatively large capacity increase. So you could take the same watt of electricity and get 35% more data from the electricity burned, because you're not burning burning electrons to actually transmit data. The data is actually being transmitted from chip to relay over an optical photon element. This is fascinating stuff. And I think that's where we're going to see the biggest increases in capacity in the next 24 months as chips meet their destinations. But you can already see it in the way they're designing these hyperscaling data centers. They are being redesigned with liquid cooled chips, optical interconnects. It's the place to be. Data is the place to be. That's why I created ComputePortal.io.
Fantastic. Jerry, you led me into the last thing. Okay, this is the last thing, I swear. This is the last thing. Jerry said AI is the place to be. He's 100% correct. Unfortunately, there's always downside to it. And one of those is, and I know a lot of people use ChatGPT, so just be aware, there's a data breach yesterday. Or actually November 7th, I think it was. OpenAI confirms a data breach. Here's who impacted: every single person that used OpenAI, essentially. What happened? On November 8th, an unknown attacker gained access to part of its systems and exploited a data set containing customer identifiable metadata and analytics. This includes usernames, email, browser-based location, and browser details. It didn't have anything to do with your bank accounts or funds. Those are all safe. But yet again, we see that our data has been purged, and all the hackers have your information. So just be aware that there's going to be even more hacks and phishing attacks and everything else against you. You thought it was great in crypto. Well, just wait until the AI ChatGPT people get you. Anyhow, that's it for today. So look, if you like today's video, give me and Jerry a thumbs up. Consider subscribing. Everything we talk about is time sensitive. But that's about it. Let's go into the Q&A, and you can ask Jerry a bunch of questions and he'll answer all of them. Let's see. Echo Lee had one. IKR, and then she talks about Matic and Polygon. Polygon and Matic had so much expansion in the bear. What the heck happened? So I actually put this out on Twitter, and I was like, why doesn't Polygon do so well? It was something about they've done great things with Polygon. There was another big project that they were part of. I forgot what it was. And I'm like, what happened to Polygon? And people said it was two reasons. Jerry, correct me here. One, they changed the name a little bit. From Polygon, Matic went back and forth with the ticker symbol. And the second thing was they changed the tokenomics. I don't even know if that's true, but that's what I heard. Jerry, do you have any Polygon, anything about that?
I do. I have some, but again, it was in a dedicated wallet staking, and it's been doing that for 2 years. So I honestly don't know. I honestly don't know. And one of the things, I think it brings up a really good point. Whether it's Polygon or anything built on top of Ethereum, right? Built on top of Ethereum. these EVM chains have shown to have tremendously limited expandability into the world of things where gazillion transactions are necessary. You know what I mean? And then obviously how they interact with these Merkle tree functions. And so I've not been following them as intently as I have some of these other new technologies. You know, so I'm not like the Polygon expert.
Yeah, I will say though, if you go to CoinGecko and you scroll down to where it says tokenomics, you can click on there and take a look at it. But this is for the new one. There was a Matic migration. That's 82%. Community Treasury 9, validator incentives. Also, I'm pretty sure this is for the max supply. It is now infinity. I think there was a cap beforehand. Correct me in the comments. I'm not 100% for sure. But yeah, it looks like max supply is inflationary. But shoot, even Ethereum's inflationary. So I don't know. Okay. Let's see. Data centers will need megapacks. Tesla, not a bad play to go. I think Tesla's going to be big just as they shoot the data centers into space and then just use the solar panels from there to essentially bring in as much electrical power as they possibly can and not have any type of shade or hindrance or anything else, and just have all the data centers up there. There's a good thing they have these rockets, Jerry. I don't know if you knew, and they can actually do that. Let's see. I think Polygon had a bunch of team members leave. It's never good, never great. Jerry, you've been doing good since Tom passed.
Who's Tom?
Yeah,
Tom and Jerry.
Oh, that's.
I'm holding my own.
You gotta love our subscribers.
Can I mention one thing real quick when they talked about the Tesla packs in the hyper scaling data centers? I follow this pretty intently, and one of the things that I've just realized through a little bit of study is that they are starting to perfect the technology to take solar energy created in space and beam it to the Earth's surface. That's an interesting technology. And then the other is to overbuild solar for overproduction so that every extra watt not needed can go to the conversion to create hydrogen, basically, right? To convert water into hydrogen and to use hydrogen as a fuel when the sun is not emitting photovoltaic energy for the solar panels to. That's a very interesting technology, and I think you'll see a lot of those type of things start to get more and more traction as the technology gets safer and safer and ready for commercialization.
I think so too. When rising data centers will want a secure, consistent power source and not want to be part of the standing grid. So it's in their best interest for not increasing the cost of the rest of us. Jimmy also says, and rightfully so, I think the data centers in space would cure the heat issues.
Yep.
That's true. I'm interested in what you just said, Jerry, about that beaming electricity down. Is it electricity or just the data itself? Well, the data can be transferred.
Well, data is, I mean, okay. How is it optical data on a photon or is it through an electron, right? There's microwave. There's several ways to do this. Keep in mind, Elon believes that the sun is the end-all be-all answer for all energy elements, right? And so if you have him applying resources to this, I wouldn't bet against him cracking the energy transmission problem.
There's a lot of people betting on him. That's why Tesla stock does relatively well over time. Jay Borges says, nice FUD about MicroStrategy. So clearly clickbait. Yes. Anyhow, no comment on property. You got me. I clickbaited you. I didn't talk about it. Have fun. Anyhow, Hudo says no comment on property. Property is another one for real estate. Yeah. And I think this is in tandem with what we talked about for New Jersey, Bergen County. So I don't know about if Proppy's doing this as well, but I thought Proppy was doing.
Proppy's actually in another county of New Jersey, and there are a couple of articles where Proppy got into Wyoming and maybe Ohio.
Oh, nice.
When I was researching this, Proppy got themselves into, I'm talking about dating back to like 2021, doing pilots with counties in other states other than New Jersey.
See, that could be it.
Yeah.
Yeah, Proppy.
One of those companies kind of built on a pseudo XRP rail.
Oh yeah. What?
Something like that. Very, very similar type. They took a chain, copied it, and started to build their own element.
Interesting.
Yeah.
Hey, Rice Stuff says, Jerry, thanks for getting a hold of me the other day. You're a man of your word. I'm guessing this was about the giveaway or something?
That had to be for a giveaway that we did with Hypercycle months and months ago. Yeah. Hey, sometimes stuff does fall through the cracks, and when it gets pointed out and brought to the light of day, it's only right to make it right. And that's what I did. And so you're very welcome.
Awesome. Here's one. So what is MicroStrategy telling us? That they will buy the top forever and they will sell the bottom? As a Bitcoin maxi, I still think that's a bad strategy. Why do you all think that's good business? Well, I mean, if they do it, like we talked about, the CEO, Fun Lee, has pretty much said that they'll only do that for specific situations when the MNAV goes to 0.9. I think they have a ways to go, but there's other, like Jerry, you said that they got a lot of different financial ways to not sell, but I mean, it could.
I think what this person is saying is speaking to their methodology of buying the top. Now, keep in mind, it is excess resources. So a dollar comes in against their operating company, which sells software. But of that dollar, 5 cents of it needs to pay the electricity bill for the office. This much goes to labor. This much goes to insurances. This much goes to this. And a certain amount of that money has to go into a pool to cover their debt obligations, right? And that is the big deal. So don't expect MicroStrategy to buy the top when they have to pull money aside to pay debt obligations. They're not going to not pay the debt obligation so that they can buy Bitcoin at 130 grand.
God. Which, we'll see.
Unless I misunderstood what 7 is trying to ask.
No, I think that's pretty much it. It's just the strategy. Some people have said, why doesn't Michael Saylor just do like value cost averaging or dollar cost averaging, or something like he gets 35 million and then instead of putting in that day, he just waits some time. But that's not what they're going to do, and it's just pretty much how it is. Yeah, I mean, I'll be honest with you. I'm happy he's here. I hope it works out, and I hope there's no selling, because even if you sell a little bit, it's like you finally have that little tiny crack in the armor. And when people see that, then piranhas flow around. Anyhow, I think that's it, because we don't have any more questions. So Jerry, thanks again for stopping on a Sunday. I appreciate it, from Costa Rica. But that's it for everybody. So like today's video, subscribe, follow Jerry over on X. Links in the description. You got a lot of great information. That's it. Thanks everybody. See you in the next one.
Pura vida.